Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully all of you are doing very well today. And in today's markets, guys, well, we knew we were going to have a little bit of a hangover after the NVIDIA news that we covered yesterday after the close, in which they took a $5.5 billion hit, not being able to export one of their key components towards China, those H20 chips. Now, as well, we knew that it was going to be somewhat of a volatile day in the mix because we had a couple different factors today. Number one, we knew that we had an earnings piece by ASML, which did add to the selling pressure this morning when they missed on forward guidance expectations. We also knew coming into the day that we had several large pieces of data, one of which retail sales, which was going to come in better than expected, which it did. But we also knew to watch out for Jerome Powell this afternoon and his speech at the Economic Forum in Chicago, which could have brought some more insights into the Federal Reserve's commentary and outlook on the economy, inflation, tariffs, and everything in between. What we didn't know is that Jerome Powell would actually come to a realization that things are maybe not as simple as he was stating a few weeks ago during the FOMC when talking about tariffs being somewhat transitory and saying the economy was in a good position. Now, at this current stage, seems as though reality check has hit Jerome Powell as well, because although he didn't really say anything outstanding in his speech, he just really came to terms with what is on the table right now. Powell indicates that tariffs could pose a challenge for the Fed between controlling inflation and boosting growth. Now, we'll go over a few comments later in the video as to what was said during that speech, which resulted in the markets that were already down today from that NVIDIA hangover. They're already down largely during the day, but when Jerome Powell started speaking, you can clearly see what happened in the markets. They went into an absolute tantrum. People were expecting rate cuts or some form of discussion like that today, and they did not get it. The market was not happy, threw a little bit of a tantrum as Jerome Powell kind of threw cold water on the entire market recovery narrative. So in today's video, guys, it's going to be a very fun-packed one. Number one, we're going to be going over those comments made by Jerome Powell earlier this afternoon, which led to a cascade in the market, after which the SPY was down over 3, and the QQQs at one point today were over 4.25 before recovering a little bit into the end of the day. Thereafter, we're going to be covering, of course, the earnings from ASML, which happened this morning before the earnings. Special shout out as well, guys. Tomorrow is going to be a very big day for earnings too. We'll be covering TSMC, American Express, and Netflix earnings tomorrow after the bell. Another big one tomorrow morning for semis, TSMC, but today we will focus on ASML and why this stock is currently down 7% right now over the course of the day. Thereafter, we will get into our normal technical analysis rundown of our major market indexes, followed by our big tech names. See, after such a big red day in the markets, where can we possibly position for some swing trades? And are these opportunities still very decent long-term portfolio opportunities? Or should we maybe be hoarding a little bit more cash than usual in light of today's sell-off? So it should be a very fun video, guys. Let's jump right into the action, shall we? So the SPY down 2.22 today, the Q ending down 3.02, and unfortunately, most of all the major indexes did take a hit, especially with that end of the afternoon sell-off. Now, taking a look at your rotation right now, well, what started off as a decent day for consumer defensives, they were positive, quickly unraveled over the course of the afternoon. Big banks as well pulling back after their earnings. Tech getting absolutely washed today as well. Healthcare not performing too well either. The only bright point in the market today was energy. Everything else truly to the downside, as a lot of sentiment was eroded over the course of the afternoon when the market just did not get what it wanted. It didn't get what it wanted to hear from Jerome Powell. Jerome Powell, like I said, we'll go over it in a few minutes. He didn't really say anything crazy, guys. He was just answering very hard questions about what the impact of tariffs will be. He said it would cause inflation and things like that. We'll get into it in a few minutes, yeah? In the one-day relative performance, guys, you can see energy, the only winner of the day. Everything else to the downside, led by cyclicals and technology, two of the sectors that get hit the hardest whenever we get new tariff news, new inflation news, or somewhat neutral to slightly bearish commentary from Jerome Powell. Of course, consumer cyclical stocks and technology will get affected the most because that's the consumer directly and growth overall. 1 week relative, we still have a little bit of gains here. Basic materials, utilities, defensives, and real estate to the upside. Everything else to the downside. And on the 1 month relative, of course, we know we are in a bear market. So the only point of green would be consumer defenses on that front. So before we get into more technical analysis here, guys, let us go over those comments by Jerome Powell, and I'll recap these in a very objective way because trust me, he didn't say anything crazy. You guys can go watch it tonight. It was about 45 minutes. It's not that long. You can watch it on 1.5x. It's just he was asked very difficult questions. Well, not difficult questions, but questions upon when asked, you can't really skate around the actual answer. Like, what's he going to say when they're asked about the impact of tariffs? Is he going to say that they're going to cause no inflation? No, right? So he had to give realistic answers. So let's get into it, right? Concerns about the Fed being able to control inflation and boosting growth. Now, he said that the central bank would be in a dilemma between those two things. If that were to occur, we would consider how far the economy is from each goal, talking about the dual mandate between protecting the jobs market and reducing inflation towards the target, and the potentially different time horizons over which those respective gaps would be anticipated to close. Powell gave no indication on where he sees interest rates headed, which is what the market did not like. They wanted to hear, yeah, the Fed's going to cut rates in a more anticipated way, but that's not what he wanted to give the market today. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. So the market's getting a little bit impatient with Jerome Powell, in my humble opinion, right now. Now, in a question and answer session after his speech, Powell said tariffs are likely to move us further away from our goals. The market did not like that one, probably for the balance of this year. So even Powell now saying this year could be a bit of a treacherous one. And I've been saying that on the channel, guys, for like the past month and a half at this point, right? We have to taper back our expectations. Can the SPY and the QQQs see new all-time highs this year? Maybe, but is it going to be a 10, 20, 30% year as we saw in the last 2 years? Probably not, right? You're either looking at nominal gains or a red year overall in that respect for markets because there's just too many moving parts right now, too much uncertainty overall. Here's another quote from him. Tariffs are likely to generate at least a temporary rise in inflation. Now, acknowledging that fact, which is obvious, right? The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass to fully through to prices, and ultimately on keeping longer-term inflation expectations well anchored. So you can see by that response, guys, he's basically saying, listen, it will lead to more inflation. How long the inflation lasts and how much the inflation will be, nobody knows because you don't have the final details on the tariffs yet. They're just put on pause. Moving on further. Indeed, Powell noted, the data in hand so far suggests that growth has slowed in the first quarter from last year's solid pace. This is, of course, true. We saw that from the banks as well, saying there's a lot of uncertainty from business managers and business investments. Despite stronger motor vehicle sales, overall consumer spending appears to have grown modestly. Maybe people trying to front run those tariffs, which we spoke about in the last few weeks as well. In addition, strong imports during the first quarter, tariffs, right, trying to front run them, reflecting attempts by businesses to get ahead of tariffs, are expected to weigh on GDP growth, right? So, of course, exports minus imports is a product in the GDP calculation, right? And when you import more than you export, it declines from your overall GDP number. So please keep that in mind. Overall, as I said, though, guys, that's all he was talking about. But it's just the questions were just very direct and he wasn't going to skate around them. Are tariffs going to cause inflation? Yeah. So in the first half of the Q&A session, he said the word, like they were talking tariffs, inflation, back to forth. And the markets were just falling apart while that was in discussion, right? What did the markets expect him to say? There's going to be no inflation? Or for Powell to say, yeah, for sure, Trump's going to take off the tariffs? He can't say those types of things, right? So the algos took over, the panic selling pretty much took over, and the rest is kind of history, right? Just answering very tough questions. But the moral of the story, did he say anything crazy or groundbreaking or anything we did not know today? No, but Powell was the last piece of the puzzle, right? Now everybody, we heard from the banks, we heard from different companies as well. Now everybody is acknowledging the fact that tariffs are a net negative for the economy. And Powell was pretty much the last piece of that puzzle. Now that Powell has also acknowledged that, while still being a little bit stingy on the rate cuts, well, now the market knows what to expect from him, right? However, you could see the bond market potentially calling Powell's bluff. When Powell was speaking during that course of time, you could see the reaction here from TLT. Some might argue that this is a further pivot away from equities towards bonds as a safe haven trade, but you can also argue that this might just be Wall Street calling Powell's bluff. Like if he's so uncertain and the Fed is so uncertain and might have to step in to potentially backstop the markets eventually, well, this might be Wall Street calling Powell's bluff of maybe they will be cutting rates sooner than everyone anticipates. However, the final answer does lie with him, and we will just have to wait, as we always do on the channel, wait and see, guys. The worst thing you can do right now is try to predict the direction and the flow of the data, especially if you are trading. When you're trading, you have to react, not predict, and focus on pure price action levels alone, overbought, oversold, support resistance, trends, and just overall market sentiment for positioning. In terms of long-term portfolios, the analysis has always been the same. DCA with every single paycheck, guys. Every single one of you, if you are wanting to buy stocks and hold them for the next 5, 10, 15, 20 years, it's very simple. Save 10, 15% of your paycheck, put it in very high quality companies or high quality ETFs that have a proven track record of going through many of these types of markets in the past. It is the best thing that you can do for your future self. That is everything in terms of the Jerome Powell commentary. Now let's dive into the ASML earnings. So ASML was down approximately about 5% for the majority of the day, but then gave back a couple more percentage points when the market kind of fell off during that Jerome Powell speech. However, their earnings were not all that bad, but this is going to be a testament to what we might be expecting in terms of earnings reactions from the markets, even if companies post decent earnings. Because of the uncertainty and because companies are not able to guide properly because of that uncertainty, even companies who have good earnings in a very hot niche right now, such as AI, such as the infrastructure build ramp, even they are coming down 5, 6, 7% in the after hours of the sessions, or rather in the open market, because they had them earnings before the bell, yeah? So do not, guys, this moving forward, you should at this point in time, right? You should be expecting most tech companies and most semiconductor companies when they report earnings, even if their earnings are good, if they so much as give a hint of uncertainty towards guidance, they will probably go down. It'll give us great buying opportunities, but do not expect 20, 30% rallies to the upside after earnings. You may just be disappointed, at least for this quarter, when companies traditionally give their yearly full guidance. So beat on EPS by 11%. That was fantastic. And they beat on revenue by 6% as well. The market just did not care. Why? Well, it was all a question of guidance as per usual, right? Now, moving on to this article right here, ASML stock dips on missing Q2 sales outlook amid Trump's tariff concerns. And they did not miss by much, guys. Very, very, very small miss by ASML. So it just goes to show you, they missed tiny and they're down 5. Imagine if they miss a lot, right? ASML cautioned that uncertainty from the potential new U.S. trade restrictions could hurt future demand for its chip-making machinery. The Q1 highlights, they reported sales of 7.74 billion euros, which missed the consensus of 7.77. They literally missed by a fraction of a percent. And that was enough, guys, unfortunately. ASML's Q1 net profit, however, jumped 93.4%. Very strong profits, and it beat the Wall Street expectation. Net bookings, which has been a hot spot for ASML in terms of gauging their demand for the future, totaled 3.94 billion euros, up 9.1% from the year-ago quarter, but missed the consensus of 4.89. So once again, that miss on net bookings also contributed to a slight decline right there. Here's their overall bookings, as you can see here, guys. Very nice. Bookings were up 9%, net sales 46%, EPS doing solid, and new lithography systems up 11%. Here is the net bookings chart. You can see, right? It's not as bad as the September quarter nor the March quarter, but it is still on the lower end. Here's the massive pull forward of demand for the AI ramp overall. But to say that this was a bad quarter of net bookings for ASML, it's just not true, guys. Objectively speaking, it was a decent quarter, but it did miss the expectations, of course. They are earning more money for every machine sold, however. Take a look at this. Your average selling price of these machines has only been going up. That's contributing to more profits for ASML overall, which was a very nice metric for boosting net margins, gross margins, and additionally, free cash flow in this current quarter as well. Let's continue, shall we? So tariff uncertainty weighs on the outlook. The CEO, here's what he had to say. The prevailing uncertainty among some customers about the U.S. president's tariff plans could lead ASML's full-year revenue landing at the lower end of its expectations. Now, the expectations are still for 30 to 35 billion. They gave that range last quarter. All he's saying now is we might come in at the lower end of the range, maybe not the top end of the range, right? So that's what they mean when they say missing guidance. It's not actually missing guidance. It's just guiding towards the lower end of the range. Maybe people were just a bit too optimistic, right? However, for the long term, everything is good for ASML, guys. And I will reiterate that everything is very good for ASML. They project the net sales could reach 44 billion to 60 billion by 2030. So you're looking at almost a doubling, 1.5 to 2x the amount of sales that the ASML company still has at this current time right now. Very, very, very solid overall here, guys. And if one chart enough for you right now, it would be this one. If I had to find one chart, that's enough to paint the picture of what's happening in semiconductors right now, nothing is changing with many of these businesses. Will they have to divest a little bit from their exports towards China? Yes, but are these companies expensive right now? No, these are the median price to earnings ratios for semiconductors. You have a few egregious ones still, like ARM, Intel, and ALAB, of course, but you'll see several of them are soon. Look at Micron down here. Micron is like ridiculously dirt cheap right now. They're trading at a 9 times forward earnings, guys. Qualcomm, 11 times. ON, 13 times, right? AMAT, 14 times. LRCX, 15. TSM, 16 as well. The one above my head, that's KLAC, 18 times, right? AMD, 18 times. Marvell, 18. NVIDIA, 21. AVGO, 21. And ASML, 23. These are some of the cheapest valuations of these companies in the last 2-3 years at least. And their demand prospects are still good. We heard from Micron a month ago. Their demand is still fine. We're hearing from TSM tomorrow. They gave us their sales numbers last week. Their demand is still through the roof. ASML is still saying that their demand is still very, very strong. But the market just does not care because it's a question of narratives right now. If you are still bullish on the AI trade from now for the next 5 years, these companies are representing very attractive buying opportunities, but you have to put your profit projections, guys, into the future, right? It's not going to come through in the next month, in the next 2 months. But if you have a long-term investing time horizon, I truly believe that the buys we make today will be rewarded for our long-term portfolios. It's just for quick and fast swing trades. If you're expecting these companies to go up 2x in the next 3 months, it's not going to happen, right? It's not 2023. It's not 2024 anymore. So we have to temper back our expectations and adopt a more value-conscious mindset. We're shopping for value right now. It's not supposed to be easy. Nobody wants to buy these right now, but I do believe that any buys made today will be rewarded eventually, but you have to temper your expectations and potentially be a bit more patient than you otherwise anticipated. In terms of their fundamentals in the company, guys, I mean, they're fantastic. Their net profit margins this year, or this past quarter, were 30.4%. That's one of the best quarters that ASML has ever had because I showed you guys, right? The price for their units is almost the highest that it's ever been. So record profits for the company right now. The CEO also reiterated that customer demand is strong 2025 and 2026. This is a typo right here. My apologies. He said that on the company statement. You can go on their website. It's not just me. They reiterated their guidance. They did not drop their guidance, just guided for the lower end of the target range. And they also still did 2.3 billion buybacks during the quarter with decent free cash flow as well. The fundamentals are good. Revenue still growing. EPS is still growing very nicely overall. I mean, their expectations for the future, you look at the forecast, right? They're not going down. If anything, they're accelerating through 2030. And we heard that from the CEO himself. Revenues as EPS accelerating with higher profit margins. Revenue accelerating as well. And they have such a high competitive advantage, guys. I mean, these machines cannot be replicated. I know China has been trying, but China, the consensus from technology experts around the world, especially experts in terms of lithography machines, they're saying China is still like 4, 5, 6 years behind in terms of the tech. And it's not as if ASML is going to keep at a standstill, right? They'll stay behind pretty much. So they still have an undeniable moat, this company does have, in my opinion, at 650 right now. I did it for 650 earlier in the day. 650 are trading at a roughly 25 forward price to earnings. Not terrible. A 1.46 PEG ratio and a free cash flow yield of 3.5. That is very good, objectively speaking, guys. And we are coming into a nice area of support. And the company is currently still down from its all-time high, roughly 42%. Like, if we're not buying ASML here, where are we going to buy it? You guys think they're going to go down to 300? Maybe, but maybe one thing we can do is nibble a little bit here. And if it continues moving down, if we like the company, build a position that we can then keep and ride into the next 2, 3, 4, 5, 6, 7, 8 years of possible growth prospects for the company, because we know AI is not going anywhere, guys. It will be the hot topic, at least for the next 5, 6 years overall, as companies continuously seek to boost their productivity overall. So ASML, long-term portfolio buy for me. Yes, it's actually in my long-term portfolio, and I do buy a little bit more of this company every single month, similar as I have been for the last 5, 6, 7 years at this point. Love the company. Short-term swing trade, just be a little bit careful, guys. If you're trying to take the swing trade, right? Very clear stop loss down below and very clear take profit above in the mid 700 area. It's roughly a 2-to-1 trade at this current time. So keep that in mind. That's everything I had for you guys for ASML. Solid company. Just unfortunately, the sentiment right now is just not being very kind to any and all semiconductor companies, which is why a lot of their valuations are just so dirt cheap, and why I started a leap contract position on Micron, because I mean, this is just ridiculously cheap for Micron overall. But I digress. That's everything for for ASML rather. Let's get into some charts, shall we? Let's do the technical analysis portion of the video, and we're going to start off with the SPY. So starting off with the SPY, we did have an uptick in volatility today and a few catalysts from yesterday evening, the hangover. I was also warning about this last night in the video, big earnings and volatility, how I'm preparing, basically saying that if we do get more market drops, I will gladly write short puts at the bottom end of the fear lows, anticipating today's decline. Now, good thing we kind of got stopped out at the highs of, the Friday into Monday candles just last week. And then, of course, we also had the support range that was established earlier this week, this past Friday, well, a week ago at this point, and Thursday as well, into deep support right now, 525 down to 496 on the SPY overall. So the daily uptrend is not lost just yet. This is how it looks, right? Nice, big engulfing move, not quite engulfing, but a 78% retracement. Higher lows are set, lower highs, and now we might just be devolving into my scenario number 3 that I was talking about yesterday as well. Some form of a very wide and volatile tightening range between this massive support and overhead resistance as we were not able to crack it through. Now, the bulls still do have a chance to recover. I'll remind you, there's a few big catalysts for that tomorrow. TSMC, UNH, American Express, and Netflix, namely. If Netflix and TSMC can breathe a little bit more life into the markets, maybe we can then challenge this high and possibly head into some form of a daily uptrend recapture. Just keep in mind, though, resistance is very close, 565 down to 550. So overall, it does look like we're coming into some form of a tightening range, but if we flush the lows of Thursday, guys, that is daily downtrend. Then you have to look to the bulls to say, can we protect these fear lows that we've established, or are we just heading down for leg number 3? It'll be challenging for the bears to get through this because this is maximum fear catalyst. If you guys don't remember what the catalysts were at this point in time, you have to replicate them if you want to flush these in a very quick manner. You have to go back to an extreme fear greed index of 4. You also have to go back to breadth indicators that almost made no sense. Percentage of stocks above their 20-day EMA was a 3. Percentage of stocks above their 50-day EMA was a 7. That rarely ever happens, guys. Last time it happens was during COVID, and percentage of stocks above their 200-day EMA was at a 14% mark read. So that's why I say the bulls, the bears, they're going to battle it out. The best thing we can do is react to the charts, not try to predict too much. But I did yesterday take a little bit of a hedge because I kind of saw this coming. I didn't know what the exact trigger would be, but I knew that any negative news without fracturing the highs of Wednesday could send us for a little bit of a sharp sell-off to the downside. So I'm glad that I did throw those hedges in place yesterday during the trading session. Moving on to the QQQs right now, down about 3%. They were down 4.25 today, and this is the expected move for the week, guys. 436.50. That is literally your expected move. We almost came down right into it in a single day after doing nothing pretty much Monday and Tuesday. However, we'll establish control right now. This was a very nice, almost engulfing move, 78, 80% retracement. Higher lows are set at the lows of Thursday, and now we came down very close to them. If the bulls have a good day tomorrow, we can somewhat evolve into either a tightening range or they have another attempt at setting the daily uptrend. Just keep in mind, though, we're now stuck in support, 447 down to 424, and above resistance, 482 to 467. These are no joke levels, guys. This is a very big level overall for the bulls to break through. All the moving averages are there as well. And to the downside, it's also no joke. It's a very big area to get through for the bears, right? The August Japanese carry trade unwind and the March into April inflation concern sell-offs, right? Very big levels to deal with for the markets right now. So I would rather just react, not predict, and sell puts towards the fear lows on a weekly basis and collect that premium. So far, so good this week, guys. A lot of wins on the table, some positions into tomorrow as well. But that is just the state of the markets right now. Extremely difficult to predict when you have all these volatility catalysts, Powell, Trump, pretty much saying something new about tariffs and trade negotiations every single day. And now on top of that, you have earnings season. Very difficult to predict, guys. Long duration swing trades to the bottoms or possibly even through the tops. Moving on to the XLF right now. Same concept on the XLFs. Very nice move on by the bulls, rather. If you take a look on the weekly charts, which show the best picture, right? It's a weekly downtrend right now. The financials bulls with their earnings were able to put in a 618 bounce. And now we're kind of retracing from the resistance range, which I was saying yesterday might be the case. 48.30 down to roughly 46.81 is that resistance range. The big area, guys, all the way from November, right? Several times it has been tested as support and now as resistance. The lows are the lows of Thursday to watch out for. So now we are looking for a little bit of maybe some higher low action. Support stays put 45.75 down to 45 flat. If they can establish support and go for the daily uptrend, good, perfect for them. But in the event that we roll over, then it's up to the bulls to save. Can they protect these lows, set a higher low, and go for a weekly trend change? Or might we just get trapped through earnings season into some form of a tightening range. Worst case scenario is the absolute flush, but you'd have to have maximum fear for that to be on the table. You'd have to have something really big happen, guys, in my opinion, to flush these lows in a rapid fashion. I'm not saying we can't slowly erode down into them, but to flush them as rapidly as this, you need something big, right? So keep that in mind. Moving on to XLV Healthcare, same concept, right? Very choppy zone of price action, very normal as well. This is a huge range of support for XLV. I know it's a wide range, 140 down about 126, but I mean, it's like 2+ years of support and price action, culminating right now in a 200 weekly EMA, which very rarely gets tested by the markets and does provide some form of bounce relief support every time it does get tested. So keep that in mind. But the control is very clear. Clearest on the weekly timeframes, right? Downtrend right now, and the weekly bounce was not so strong. The weakest of all, as a matter of fact, 50% retracement size. So flip a coin, 50-50. The bears have an equal chance of reversing all the gains and going back, and the bulls have an equal chance of a higher low and going for the trend change. For that trend change, you need to break above yesterday and last Tuesday's highs, which currently sit 139.25 overall. So keep that in mind for healthcare stocks, guys. We get to hear from a very big player tomorrow, which is going to be UNH. They've had a phenomenal rally back almost to their all-time highs. Can they save it? One thing's for sure. If we come back down here, could be a nice entry for a swing trade, guys, because now you have the weekly engulfer, right? Just looking for a weekly higher low, maybe for trend follow through or a retest of the highs. That would be a nice little swing trade entry that I would be looking out for in the event that they do dip. Moving on to SMH. SMH down 4.22%. We were warning about this yesterday after the close, right? Because we already had the NVIDIA news. I was saying that today could be a bad day for semis and watch out for the Thursday lows. And as a matter of fact, we came down and tested them directly. So now, right, they tried to go for the daily trend change attempt. Didn't happen, lower high. If we break through this low tomorrow, that would be an official new daily downtrend. And that's how you know that your weekly bounce on semis, unfortunately, is finished. The bears are still well in control of this weekly downtrend. Lower highs are now set at the highs of last week. And with this bounce, a very good bounce, 618 bounce, but if it cannot translate into a trend change, well, the bears are just going to revisit these lows, maybe even lower. If that's the case, your 200 weekly is your first line of defense, 178. You can see that semis don't often test this, and when they do, it is usually synonymous with a good buying opportunity. So if it does present us with that opportunity again, I will gladly be nibbling. I did some today as well, but not at the market, right? I am targeting these lows with my short puts overall. Below that area, the big level of support is the 2021, 2022 highs and the 2023 August sell-off highs as well. Support 160 down to roughly 140. That is the next stop for semiconductors if the market keeps unraveling, but it's anybody's ball game right now. I'm not trying to predict whether we do this, whether we do that. All I'm doing is writing short puts in the area that I want. Volatility right now, in my opinion, benefits options sellers a lot more than options buyers, unless you're trying to day trade, swing trade, right? Short-term calls or short-term puts off of these momentum moves. Then, of course, the analysis is different for you. Moving on to IWM Russell. The Russell down about 0.96% today. And I mean, not that bad, all things considered. You would expect on a day where the Qs are down 3, maybe the Russell should be down 3 as well. But that was not the case, right? So daily downtrend clear as day right now. Nice bounce. Higher lows are set. Lower highs right now, though, however. And we're going to be looking, can the bulls save 177.28? If they can, they have another chance at an uptrend. However, keep in mind, where's that going into big resistance? 200 down to 188. That zone as well is no joke, right? Support for a while, resistance for about a year and a half, and support back here in 2022 as well. So no joke. And it culminates in the 200 weekly EMA as well, which is above us right now. Now, if the bulls fail and we roll over, you're heading right back down into the fear lows, which simultaneously is massive support. That's all the 2022 lows. And coincidentally, also 2018 and the 2020 highs. So a big level down here, 178 to 163. If I'm looking to play the Russell, one way I'm doing it, guys, would be to sell short puts under the market. Same concept. If you guys are, be careful if you're doing this, guys. If you're trying to play TNA, right, with short puts, you guys should be going so low that you would be surprised you get assigned, right? These 3 times leverage products, you have to play them in a very conservative manner. Do not be too aggressive with them at all, or you might get burned. Moving on to Dow Jones. Dow Jones down 1.73% today. I mean, not the worst day for the Dow Jones, but just following the rest of the market. Yeah, higher lows are set at the lows of last Thursday as well. Very nice bounce. You can see that on the weekly time frame, right? All of these had very nice bounces, but a bounce is only one part of the equation. You need the trend changes. That is a 618 bounce on the Dow Jones. Very healthy bounce for the bulls overall, but now you can see after a day like today, the volatility is probably here to stay. What they're trying to do is set probably a new higher low. Anything above right here, 38,453, is going to be for a higher low attempt. They can use support, which is 39,000 down to 38. They can use this area, try to go for daily trend change, but you can see what happened here. Resistance, right? 41.3 up to 40,005. It's a big area. These areas are no joke to get through for the bulls without more certainty catalysts entering the market. So worst case scenario, you see an unraveling of the daily uptrend into daily downtrend. Then you need the bulls to protect these lows and set a weekly higher low and go for a two-step recovery stage process for these markets. Or maybe another scenario is just evolving into some form of very wide and awkward tightening range between the resistance level and between the fear low supports. Moving on, that's pretty much everything for our major sector recap. The other ones we'll do tomorrow because tomorrow is the last day of the week, of course. The VIX, well, the VIX was up 10% today, but not crazy, guys. Nothing crazy. It did pop up during Powell, of course, then kind of tapered off towards the end of the day. So, of course, we're not near the fear highs. But as I was saying, guys, you know, the volatility may be here to stay in an uncomfortable fashion, maybe between 35 and 25, could become the new normal over the next few weeks. It happened during the Japanese carry trade where it took us, about a week and a half to unwind that volatility. But in pure bear markets, such as 2022 and the beginning of COVID, you can see how long the volatility can sometimes stay sticky. Not only during that time, but go back during the great financial crisis. I'm not saying that what we're having today is like the great financial crisis, but the volatility, when it goes high, it can stay high. And even the flash crash of 2011 also saw volatility stay for about 2-3 months of time. So I would not be surprised if the volatility can stay a little bit sticky, a bit elevated for longer than you might expect, which will give you some very awkward and outsized moves sometimes to the upside and equally to the downside, as we saw today. Moving on to yields right now. Well, the yields, the bonds right now down because I guess the bonds were kind of calling Jerome Powell's bluff that he wasn't in any rush to cut interest rates. Well, the bond market is saying, well, listen, two things right now. We're pivoting from equities to bonds because we're worried, right? The market's nervous right now, but there might also be an additional bit of gas to this trade, which is maybe Wall Street now calling the Fed's bluff, right? If Jerome Powell can come to a conference and adopt somewhat of a realistic tone and, when asked these very difficult questions, say, well, listen, there's a few factors that could unwind the good economy that we have right now. Maybe they will be forced to step in, which is maybe what bond traders were trying to price out during the afternoon today. But no defined price action levels were broken today, right? We're still watching to see, is it going to keep breaking to the upside if the bond market keeps unraveling? Or is it going to come down as people search more safe haven trades and people try to front run maybe a faster than anticipated Fed pivot? Very complex trade right now. You might have to be patient, though. On the 20-year yields, same thing. Coming down, but there's so many factors at play, so many moving parts. You just got to take it one day at a time. Look for major level breaks, either 5.08, then you know something is truly wrong. And if you come back down here, 4.36, I think you have your answer. That'll be pretty much the bond market stabilizing and more moving towards a rate cutting environment overall, which is why the TLT trade is still a very good trade. I've been vocal about this, but you have to have a very, very long time horizon, guys, right? All of these trades for TLT will only come into play back half of this year into 2026 and maybe even into 2027 to truly, truly, truly get that lift that you think that this trade does deserve. It might take a lot longer than some of you are expecting, so keep that in mind. Moving on to gold right now. Gold having another insane day's worth of rally. I mean, this must be one of the biggest 6-day rallies front to back on gold, in a very long time, let's just say, right? But now, however, we are peaking on several indicators, right? You're overbought on the 4-hour RSI to a level of 82. You're now overbought, significantly overbought on the hourly time frame. The daily is also into daily overbought conditions, guys. So I would be quite cautious. It's been a very nice rally. If you have some swing trades from down here, don't get extra greedy, especially if you're swing trading them. If it's for a long-term portfolio position that you never plan to sell, well, then it's fine. But those of you swing trading gold, you got to be a little bit careful here. Don't get too greedy on this trade. I know it looks juicy. If you have a full-size position here, maybe you want to trim some, or maybe you have been trimming some, which is the logical thing to do, right? And maybe you just establish some levels at which point you want to exit the trade and maybe wait for a little bit of a retracement to the downside to get a better position entry for maybe another swing to the upside. And don't get it twisted, guys. I mean, it always pulls back, right? Every single one of these moves eventually does pull back to the 12 EMA or deeper. It happens every single time. Don't think that this time is different, that we're just going to blast off like in a straight line vertical here and never retest the 12 EMA, right? It will eventually happen. Just do not get caught off guard. But gold has been performing very well. Congratulations to everybody out there who's been playing this one for some swings over the last month and a half of volatility. And if you have it in your long-term portfolio, guys, well, there's nothing you should be worried about, right? Because it's a long-term position. Now, moving into Bitcoin. Bitcoin oddly holding up, guys. Oddly. I mean, Bitcoin has done absolutely nothing. It does not respond to these market volatility catalysts, right? There might be a few reasons behind it, guys, but nobody quite knows. Are large people like Michael Saylor and other institutions buying more Bitcoin that they can acquire? Sure, you can look at some on-chain data that shows that, BlackRock is positioning more for its ETFs. There might be some large institutional buys behind that as well. There are some allegations, or rather some confirmations, that people close to Trump have also been buying a lot of crypto recently. We'll see, right? A lot of these things are somewhat speculative in their nature. Overall, one thing's for sure, it has been holding, guys, below resistance. 87 up to about 93 is that resistance mark. Very important level for Bitcoin overall. If you do see a breakdown below this week's lows, 83K, you could anticipate further downside. Maybe the weekly bears will start just pulling back on this one a little bit. You can see it's a very clear weekly downtrend. The size of the bounce is very nice, but maybe even Bitcoin stays caught between this overhead resistance range and maybe the lower end of the support range as well, which is 75-ish down to about 67, right? It could just be trapped here for a while. And when it's a range-bound trade, guys, sometimes people get chopped up, right? The one thing you should do if you're swing trading, well, if you want to take shorts, the stops are above here, the highs of the candles, and the longs should be closer or not to the bottom end of that range, of course, right? But Bitcoin, I have to give it to him, right? Holding up better than a lot of other assets in this environment. That's everything for our overall market recap. Now let's dive into big tech. So Apple down about 3.89% today, up a little bit in the after hours overall, but really sacrificing all of the upside movement from that tariff exemption news on smartphones, electronics, and laptops that occurred over the course of the weekend. Now, the daily uptrend on Apple now is still quite clear, looking for a higher low. Anything above 183, still looking for that higher low. And right now, there is possibly a swing trade opportunity on Apple. We just hit oversold conditions on the hourly into decent support, which is roughly 196 to 187. It's a pretty big level, guys. Lows of the August Japanese carry trade and the highs of 2023 and earlier 2023 as well. That being the case, if you're looking for a higher low, you're looking for hourly oversold conditions for a little bit of a swing trade long. Now, how that would work is you would be taking the trade roughly at entry now. The stop goes below these lows right there, and you're targeting expansion into the resistance range, which is 221 up to 211. I'm not saying the trade is going to work, but the setup is here offering a potential entry right now. That being said, the daily bulls are still in control, and the weeklies, well, it is still a bearish overall downtrend. The size of the bounce on Apple was quite adequate at about 78%. So it's going to take a lot of juice for the bears to just unwind this entire trade overall. Still looking for a bit of a weekly higher low for possible continuation, or maybe another case, as I was saying with the rest of the markets, maybe we just stay trapped, guys, between resistance 222 to 211 and the support range 196 to 186. If you are selling premium on days like today, well, you'll be presented with some glorious opportunities to sell puts on Apple into the lower end of the support range, 177 to 161. That is the lows of 2024 and also consequently the highs of 2022. A fantastically strong area, and the 200 weekly EMA. You'd be buying Apple at a top to bottom discount if assigned of 31%, and that is the type of trade that I like to do. Moving on to AMD right now. Well, obviously AMD getting hit front and center with that NVIDIA news yesterday, and today the damage, of course, was just perpetuated. 7% to the downside, almost flushing the lows of last Thursday, not quite losing the daily uptrend, but very close, right? So AMD might be something similar. Can the bulls still have a chance of recapturing to the upside? Yeah, but right now you're in no man's land, right? You're midway between resistance and midway between the bottom end of support. Those two areas, I'll remind you, are very big, right? 2023 lows. Then you have the highs of last February and March, just this past month ago, right? Very hotly contested zone of price action for AMD, and that is 112 down to roughly $98. Down below is support, roughly 82 down to about $65 overall. And on days like today, it presents some fantastic opportunities to write some short puts well deep into the markets, of course. This is exactly where you would want if you are looking to be assigned some AMD shares at the best possible price, or as an option seller looking to benefit from the increase in volatility, rapid decline in price to give you a crazy low strike for some very decent premium overall. Long-term, the fundamental thesis for AMD has not changed, although the sentiment would make you believe that. They are still expanding revenue and EPS in a very good fashion. The company is still trading at a very cheap valuation right now, and their next few years should be some of the best in the company's history as they expand EPS, expand revenues, expand free cash flows, and net margins overall. I'm not trying to convince you of that trade, but, right, if that is your thesis for the next few years, well, maybe you can't really afford to get shaken out by short-term volatility. Maybe you just want to slowly continue building that position. Moving on to AMD right now, moving on to Amazon right now, down approximately 3% overall. And the price action on Amazon is somewhat similar. However, we did lose the lows of last Thursday. So we had a nice attempt at a daily uptrend. The battle was into resistance, 191 to 180. And now, unfortunately, daily downtrend for Amazon. So that means if you get the daily downtrend, the weekly bounce is finished. And now the bears are still in control. Now they got the lower high and now might be looking for a lower low. The best case scenario at this time is that the bulls are able to say no, set the lower highs, and go for the trend change. Another case scenario is just a very wide range of price action at these lower levels. We're trapped on so many stocks, on so many indexes, trapped between resistance, 191 and 180, and below support, which is very wide, 173 to 141. I say it's very wide because it's the August lows, it's the 200 weekly EMA, it's the lows of April and May, but more importantly, it is the entire all-time high price action level for like 2020 through 2021, guys. It's not going to be easy for the bears to get through this level, which is why when Amazon has big red days like this, if we have some buying power, it could be very interesting to write some short puts well below the market overall on Amazon, below the fear lows, making sure you're getting the best possible valuation on this company as you can possibly afford. They have earnings coming up next Thursday, so be quite cautious about those earnings. I still love this company, guys. Amazon is a fantastic company overall. It's back to the 170s, which means their price to earnings on a forward basis should be around a 28, and their PEG ratio more in line with a 1.4. Fantastic valuations, expanding everything, guys, expanding free cash flows, expanding margins and everything. And I'll remind you, Amazon, guys, right? No fundamentals of this company have changed. The price targets are still very high, and in just a few short years, this company will be making almost $1 trillion in revenue. Can you imagine? Almost $1 trillion, right? So I still believe Amazon is a fantastic, fantastic, fantastic buy for a long-term portfolio in these lower levels, and also a great opportunity to continuously write short puts well below the market. Moving on to Google right now. Google, same concept, down about 2% today, but Google surprisingly held up better than most today. Maybe there's just nobody left to sell. Who knows, right? But the price action was not too bad. The lows of Thursday are still intact at 152.40. So we did have a nice daily uptrend, however, into resistance similar to a lot of names, 163 to 175, getting rejected if we flush these lows by tomorrow. Unfortunately, that will be a loss of the daily uptrend, and the bears might just be looking to grab a little bit more room. We know that the bears are in control right now of this weekly downtrend. A very nice bounce on the weekly timeframes, though, 61.8%. So it may not be so easy for the bears to just flush this in one clean shot. And as I've said on many stocks in the previous, last half hour, right? Maybe we don't just flush, and maybe we don't just moonshot rally, especially not until their earnings, which are next week, as a matter of fact, next Thursday, more specifically. Maybe we just stay somewhat range bound between resistance and support. This is a very big level of support, guys. 149 down to about 136. It's the congestion area from 2023, and it's the all-time highs from 2021. I love finding stocks where they were in 2021. Why? Well, especially if we have better fundamentals, right? Where was Google's EPS in 2021? 561, now 50% higher, almost $9. Where was the revenue? 257 billion, now almost 400 billion, 50% higher. They have better fundamentals and they're the same price. That's why I like writing short puts on Google down below here, and also adding some shares for my long-term portfolio, because objectively speaking, the company is very cheap right now, guys. 17 forward price to earnings, a 1.16 peg, and record levels of net margins and free cash flow. Sounds like a decent opportunity to me. Moving on to Meta, down 3.68%. Meta's been struggling with their, antitrust lawsuit, which is now front and center. I mean, the case has been in place for the last 4 years, right? But that is the news that's been afflicting Meta as of recently. Meta's come down a decent ways, guys, now from 530, where we did the analysis, where it was a 21 forward price to earnings. At 500 now, this is going to be very close to a 20 forward price to earnings at a 3.6% free cash flow yield with very good net margins and very good free cash flow as well. So keep that in mind, even though the price action looks a little bit troublesome right now. The valuation is quite attractive on Meta. They've unfortunately unwound this entire move. They never set the higher lows, guys. And now we have unfortunately unwound all of the price action. The lows right now are 485. Can we test them again? Sure, but we are into deep levels of support right now, which is pretty much ending at 450. This whole area, 535 to 450, wide range, right? Can we flush these lows? Sure, of course we can. The lower highs are set, might be due for one extra leg, but it might be a bit more difficult for the bears to keep pushing as the valuation gets cheaper and cheaper and cheaper. People will probably start buying Meta overall. Still a very good company, but we know the problems at hand. They have the Department of Justice monopoly antitrust lawsuit case ahead of them, which will be settled most likely in the next 30 to 90 days. And of course, as well, they're an advertising business. And when times get tough, people tend to pull back on advertising. So it could weigh down on Meta's revenues, but we know Meta has been very good at protecting their profits. So their profits probably won't be affected, but can their revenues see a decrease in forward guidance? Yes, and that is what something that will be front and center here when we take a look at their earnings come Wednesday, the 30th of April. Moving on to Microsoft right now. So Microsoft down 3.6 and also challenging their Thursday lows, almost forfeiting the daily uptrend right now, right? Getting rejected at resistance, which we pointed out yesterday, 408 down to 393, now back into support, 379 to 365. I was saying if we do break down here, fantastic opportunity if you have the capital to be writing short puts at the lower end of the next line of defense, which is the fear lows pretty much. We get to hear from Microsoft earnings the 30th of April as well. This support range is no joke, guys. It's the 200 weekly EMA. It's the consolidation area of the fall 2023 sell-off and the 2021 highs. Whenever you're looking for time machine prices, just look, has the company been improving its fundamentals? Well, Microsoft has. How much were they making in 2021 EPS? 8. How much now? 13. How much revenue? In 2021, 168 billion, now 276. You can see they've been largely improving their fundamentals, but we're getting these companies for the same prices, right? Microsoft right now still off its all-time highs, 20%. And if assigned down there, you'd be very happy to pick up Microsoft 26% below their highs, right? So keep that in mind for Microsoft. Not looking terrible. We'll see if the bulls can protect this range. Now, one of three scenarios, right? Either we're going to get the daily uptrend, either we're going to flush and resume a daily downtrend and go lower, or another scenario could just be a very wide and awkward range-bound scenario for the markets. Moving into Netflix right now, Netflix down 1.5, but then again, they have their earnings coming up tomorrow after the close. The expected move is 7%. 7% from here would be almost all-time highs. 7% lower from here would be into the range of resistance, which right now is 935 down to 900. Now, full disclaimer, I expect Netflix to have very decent earnings, but they're up against very tough comparable numbers as well, against a lot of records that they set in Q4. So please keep that in mind. And if their guidance is not absolutely perfect, Wall Street might not like it. Dare I say right now, guys, Netflix is somewhat more of a, insulated stock against all the tariff rumors. I assume people are not anticipating that people will cancel their memberships by the millions because now Netflix has several different tiers, right? We've been talking about this. The reason that they've been having record revenues, record subscriber counts is because of their advertising tiers, right? Only about $4 or $5 per month, which is very cheap. People won't cancel. If anything, they'll trade down from the ad-free tier at $15 to $4, which is better. Well, it's less good for revenue, but it's better for profitability. That ad tier is a higher profit margin tier overall. Keep that in mind for Netflix, guys. I'm expecting good things, but then again, the company is trading right now fairly rich. At $8.55, it was a 34 forward valuation. Now, about 10% higher, you're probably looking at a 37.38. So they do have room to fall, so please keep that in mind. Fantastic company. If it does come down here, sub 800, I will be buying a little bit more. 800 down to about 700 is my real target range. We're going a little bit heavier on Netflix. Onto NVIDIA right now. NVIDIA down 7% after the news directly hit them yesterday, right? Not flushing the lows of Thursday. Very important, 99.25. They protected it, but we know that they never set the daily uptrend. Equal highs, if you flush 99.25, that is a new daily downtrend. That will mean that well, one thing, you're getting rejected at resistance 111 down to 101. But additionally, that will be your weekly lower highs are set in the context of this perpetual weekly downtrend. It was a very nice bounce for the bulls, but a bounce without trend confirmation is only a bounce. We will be looking for the higher lows, and there's a few areas that can do it. Number one is down here, $96 to $78. I mean, if they flush these lows, it's just a downtrend, right? But they have all the way until 89 to say no to the bears and try and get a weekly uptrend formation. The best thing you can do on NVIDIA is something exactly like I did today on a big violent day to the downside, write short puts into support below the fear lows and just collect that juicy premium. And if assigned, you know that you're getting a best possible price rather than trying to buy here and guess whether we get the moonshot or short here and guess whether or not get the flush. That's fine. If you guys want to do that, I would rather just play the credits, right? I'm an option seller in this market. Well, I'm always an option seller. It's just that right now I get to sell wider than I normally can, which is quite advantageous when you're looking to be a bit conservative and, you know, be in cash by the Friday session and not commit to too many large swing trades that last a few weeks over time. Moving on to Tesla right now. Tesla also down today. Tesla was down 5% overall, but they have their earnings coming up next Tuesday. As I was saying in yesterday's video, I don't think we're going to really move much before next Tuesday. No cracks of the highs probably, and maybe even no cracks of the lows 215 until that earnings. I think it's just going to be consolidation mode overall, even though we do have somewhat of a new daily downtrend. Like I said, earnings is probably going to move this stock over 10%, right? So 10% from here would be, you know, recapture the highs into resistance. Resistance stays put 300 down to about 250, and 10% to the downside after earnings would be right into support lows 220 down to 190. My favorite way of playing Tesla, guys, in this market, very choppy market where the weekly bears were in control, tightening range right now. Look, what Tesla has done over the last 5-6 weeks, I would not be surprised to see in a lot of stocks and even the indexes alike, just trapped between two levels, the euphoria breakout levels, but also the fear flush levels as well, right? As we maybe get no new developments on tariffs, maybe the best thing we can get from tariffs in terms of new developments will be deals, and especially some resolution between the US and China. That's the only time that you can argue that some of these euphoria highs, well, you know, recapture the euphoria highs, because every time Tesla has broken these ranges, it's been sheer bouts of euphoria, yeah? So keep an eye for those earnings. The best way I like to play Tesla, you guessed it, playing short puts, selling puts way, way, way below the markets, guys. You'd be surprised the level of short puts that you can find in the markets today on Tesla. Like if I just pull up the options chain on Tesla real quick for their earnings next week, yeah? If I just go down here and I use the rules that I tell you guys about all the time on the channel, right? You can get literally a 2 delta paying between 0.25% and 0.5% at 160. At 150, you can still get 45 cents, which is somewhat decent in terms of ROI. It's not the best ROI, but still 150 by next Friday. That would literally mean Tesla would have to sell off from here all the way down to 150, breach the first support and into the second support, 37%. Is it possible? It is possible, but the market makers give it a chance of only 2%. It's a 2 delta, right? So keep that in mind. That's how I like playing these markets, not trying to play direction from here. Moving on to Palantir. Palantir down about 6% on the day. They were down about 8%. Palantir holding up some gains pretty well, all things considered. Daily uptrend is in place right now. Higher lows are set at about 84. This guy right here is your higher low. So one of two things is going to happen. Either they're going to set the higher lows and go for the trend expansion, or we're just going to roll this over, come right back into support, and the bulls will have to play defense around 84 down to 77. What's my favorite way of playing Palantir? I don't even have to say it, right? I'm going to bring these up so you guys understand what I'm trying to do here on these charts. Let's take a look at next week's options, yeah? All the way down here on Palantir, 71, 72 strikes. 3-4 delta, paying 0.25% for a week, right? I know it's not the craziest ROI. The 0.5% rule is not even that much further away. 74 for a 5 delta, right? 5% odds of Palantir by next Friday coming all the way down here to 74. Question for you. Would you rather buy it here or would you rather buy it at 74? I don't know if it's going to 74. All I know that if it does, I'd rather be patient and not commit to 100 shares here if I don't have to, right? And if not, I just get to collect the very juicy premium in my pocket. That being said, taking a look at Palantir, they have undone the weekly downtrend, nice engulfing move, and that's up to the bulls to prove it to us. Can they set a weekly higher low into support to maybe go for a weekly uptrend and move back to the all-time highs? Very nice price action on Palantir, a lot of volatility, and that's what I like as an option seller. Moving into SOFI right now. SOFI almost doing a bunch of nothing today in relation to the other big moves we got, right? 2.56% to the downside. Higher lows are still set at 1010. Lows of last Thursday, right? They try to go for the daily uptrend. No go. Tightening range right now. If you break below 1010, daily downtrend is underway. And then you look to the weekly, you will understand that the weekly lower highs are now set. It is in the context of this big sweeping weekly downtrend. This was a very nice bounce, in fact, right? 50, 55%. That does not guarantee, though, that you will get a new weekly uptrend. Just gives the bulls a chance, right? If we do somehow keep trending lower a bit, well, I like selling put options. Of course, I like selling put options down below in the $9 to $8 range, the lows of the fear event, right? A few weeks ago, and all the way into this batch of price action down here. That's when I'll be targeting these lows. The valuation of SOFI right now in the $10 range is pretty good. 0.76 peg. The price to earnings ratio is a bit high because they're growing earnings really quickly right now from zero, right? Take a look at their earnings. It's very simple to understand. They're growing it from zero. The ramp is very nice, so it will be accelerating, but revenues are moving really nicely for SOFI right now overall. So please keep that in mind. Decent company, relatively cheap valuation right now. If you have a long-term time horizon, I'm a big fan of accumulating some SOFI as cheap as we might get it. Moving on to Uber right now. Uber only down 1.3%. Matter of fact, Uber was green a majority of the day, right? Uber's cheap right now. That's probably why. Daily uptrend is still in motion. Higher lows are set 68.42. And overall, guys, looking for a daily higher low. Anything above here is going to be that daily higher low. The good thing is that we're above support right now. 73 down to 68. A very, very, very big range, right? Support, resistance, support, 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 and resistance at the same time, right? A little bit of support. You can see it's a very challenging area. Once, if you're the bulls, you like to use it as support. If you're the bears, it's tough to get back through. But overall, right, not too bad above the moving averages as well. You'd be looking for trend continuation into the $77 to $80 range. And you'd be looking to the downside for bulls to backstop this. How do I like playing Uber? Simple as well. Get a downswing. Get a downswing. I'm looking to play short puts below the market right now, rather than trying to predict where Uber is going to move directly from here, right? I'm very patient. I wait for the market to come to me, and then I place the strikes that I want. Uber at $70 is quite cheap right now. A one forward peg ratio and a free cash flow yield of 5%. Very solid. And now lastly, TSM, guys. Well, TSM is going to have, a relatively big move by tomorrow. We can readjust these expected moves. Let me refresh this page. The expected move by tomorrow is about 5% up or down, yeah? So 5% on TSM from here would just mean recapturing the highs of earlier this week. 5% down from here would mean being right into support. So we might not break any key levels if it goes in the expected move. If it goes above, well, of course, there's a few key things at play here, right? In terms of earnings tomorrow morning. I can't really give some price action because earnings is before the bell, right? If you break the highs, it is a confirmed new daily uptrend. Just keep in mind, you're into resistance, 171 to 156. If it breaks down below, two key levels, 146 to 138. That is a shallow level, which is the fear lows, the August somewhat fear lows, and the April-March highs. The bigger level, though, below it, the very attractive level to write some options into, is 133 to 113, 200 weekly EMA, okay? TSM tests it a lot, only broke through it once in 2022. You can see it tests it a lot, but not often does it actually breach through. And that is the 2021 highs, guys. 2021 highs. If I can write some short puts after earnings, if they go down into here for next week, I will probably gladly take that trade. Why? Because at that point, they'd be trading at like a 14 forward price to earnings, right? It's just makes sense, right? If you drop from 160, where it's just right there, into like the 130 range, that's 20% lower, yeah? 20% of this, 20% lower of this is like a 15, 14 forward price earnings. That's dirt cheap. The PEG ratio would become like a 0.8, 0.85. That's dirt cheap. The free cash flow yield would probably go up to about 4. That is very attractive overall. The demand is strong. The guidance should be quite good. Whether or not the market cares is something completely different, yeah? But if we can find 2021 pricing on TSM while they've been improving net margins, they will be front and center for the next 5 years for this AI trade, which will not stop. Mark my words, right? Look at EPS for the next 4 years. Look at revenue, but more importantly, where are we in relation to 2021? 57 billion. This year should be 112. That's a 2x. EPS, same concept. It was 4 something. Now it's going to be 9. 2x on all metrics or at the same price as 2021. So you be the judge. I'm not forcing you to buy TSM. I know they have geopolitical risk between China and Taiwan, of course. But if this is a company in your long-term portfolio and you do agree with the thesis, well, it could be a decent add. Long-term portfolio for me, yes, but there are those geopolitical risks. Their competitive advantage is very clear. They have a very wide moat, in my opinion. Very solid company, and the fundamentals do agree. How I'm trading it, well, I'll remind you here, guys, right? I'm just selling puts below the market overall. So keep that in mind when going through all of these companies. Tomorrow, since we have a longer video probably, I'll be going through a whole bunch of different stocks that we didn't cover today, but I did take some trades today on HIMS. I mean, I won't bring you through the whole account and the trades, guys. I can just take you through my position tracker. I do this as well, right? Recap some of the trades that I closed today. A lot of trades were closed in terms of the wheel. The UAL contracts we wrote for earnings, those were good. AMZUs, we closed them for a nice profit. NVO, Reddit, Chewy, Nike, those are all closed today. The wheel trades for a nice profit. We opened some Robinhoods for next week, some NVIDIAs for next week, some HIMS for next week, and some TQQQs at the lows of the Powell sell-off, all for next week. Tomorrow, we still have some running. Amazon, ELF, Google, Rocket Mortgage, and SOXL are still running for tomorrow. So those are the trades that close for a profit. These are the ones that I open. It's just a quicker way of viewing things. Like, you guys can just pause on this screen and get a good snapshot. So it's also something I offer all my members. But we'll be going through a ton of more opportunities, as I always do, like on the Friday recaps. And, well, tomorrow's Thursday, but it's the last day of the week. And the Sunday top 5 options, right? So we'll be going over a lot more stocks. I know during the week I focus on big tech and the indexes, but that's just because I give so many other different trades on the Sunday videos and on the Friday videos as well. We do a big market recap for, you know, other stocks outside the ones we usually cover. But that's everything I had for you guys today. So if you guys enjoyed it, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. Would love to have you back. We do these Monday to Friday after the close. And lastly, if you have any questions, guys, now would definitely be the time to ask them in the comments section. Anything on my trading strategy, on stocks, on options, on macro, on tariffs, on Powell, anything you guys want, leave it down below in the comments section. And the event that you guys also wanted to join our community of almost 200 members that roughly trade the exact same strategies, very consistent strategies, and focus on long-term wealth creation, right? With long-term portfolios as well. Well, the link to the Discord is down below. You get access to all of the trades that I just showed you on that spreadsheet, but they're all called in real time as well, right? All of my trades, whether they are the wheel trades, selling puts, or put credit spreads, call debit spreads, put debit spreads, anything you could possibly imagine, leap call contracts, long-term portfolio positions, swing share positions. There's something for everybody, small, medium, large accounts as well. We do live streams in the morning every single day for about 2.5 hours after the open, where I trade live, and also take all your questions on your stocks, your options, your portfolio, and anything in between. And of course, you can ask me if you're ever not there for the live streams. They're all recorded. You can watch them after. And as well, you can ask me all of your questions in our chat rooms throughout the day, and I'm very fast to answer each and every one of your questions. I also do private videos where I share more option strategies that I don't often do tutorials on YouTube, advanced level stuff, also how to take account sizes, depending on your account size, which strategies to run that give you the best ROI versus your risk tolerance, and more advanced option strategies as well. Members have been finding tremendous value on these private videos so far, and so good. And you also get access to all of my watch lists, like every single one of these watch lists for the options, value stocks, any single watch list I have, it is yours. And any technical analysis that you see on a chart, such as these, like support, resistance, trend lines, whatever analysis I have on them right now, and all the annotations for the fundamentals for like over 100 plus companies, you get all that with the click of a button, guys. It's just literally a copy paste. You get all my chart layouts, all my TA, and everything in between. If any of that sounds good to you, I'll remind you the link is down below in the description. And if not, I guess I'll see you back on the channel, guys. So that's it for me. Take care. I'll see you tomorrow after the close. Have a good last trading day of the week, and peace.